Hi everyone. Today we're going to talk about Australia's new sustainability reporting standards, the ASRS, and what they mean for carbon accounting. If you're wondering whether this applies to you and what you need to do, stick around. We'll keep this short and practical. We'll cover 5 things: what ASRS actually is, why it matters to your business, who needs to report and when, what you'll need to include in your reports, and how to collect the data. So let's dive in. What is ASRS? ASRS stands for the Australian Sustainability Reporting Standards. It's built on international accounting rules and includes 2 main standards. So what's the big deal? Well, you'll need to report on climate emissions annually alongside your financial reports, and there are penalties for getting it wrong, but it also creates transparency that your investors are demanding. So what's in it? Well, your ASRS report needs 3 main things: emissions reporting across all of your operations, scenario analysis showing how climate risks might affect your business, and transition planning. So that's essentially a roadmap for reducing your emissions. So how does ASRS fit in with your other reporting requirements? Well, you might already be reporting under NGER. That's just the numbers. ASRS goes further, requiring governance details, strategy, risk management, and eventually Scope 3 emissions. It aligns with global IFRS standards. So if you operate internationally, you're speaking the same language as your customers. So what's the key difference? Well, ASRS is about decision useful information for investors, not just compliance. And on that note, it's not all about compliance. The benefits of going through this process include driving continuous improvement in your operations, building investor confidence, aligning your business with global standards, and strengthening your reputation. But it also can reveal opportunities for innovation that you might not have considered. So who has to report and when? This rolls out in 3 groups. So Group 1, the largest companies with over 500 million in revenue, they start submitting their reports from 2026, depending on their year end. The expected submission is 3 to 4 months after your year end, depending on if you are a disclosing entity or not. And then Group 2 submits reports from 2027 and Group 3 from 2028. This covers medium-sized businesses and all NGES reporters. So check the table to see where you fit in. The thresholds are based on revenue, assets, and employee numbers. So what do you report? Well, year 1 requires climate statements plus Scope 1 and 2 emissions. So that's your direct emissions and your purchased electricity. Whereas year 2 adds Scope 3, so that's your supply chain. You'll need to disclose your governance processes, your climate risks and opportunities, and scenario analysis and transition plans, and your emission targets. So let's go into our Scope 1, 2, and 3 with a visual breakdown. Scope 1 is what you directly control. That's your facilities and your vehicles and so on. Scope 2 is the energy that you buy in. And Scope 3 is pretty much everything else, from your suppliers upstream to how your customers use your products downstream. Scope 3 categories. So this is your supply chain and has 15 categories. Upstream includes things like purchased goods, business travel, and employee commuting, whereas downstream covers your distribution, your product use, and your end-of-life treatments, and so on. So not all will apply to you, but you will need to assess which ones are material. So how do you collect the data? You'll source your data from supplier reports, invoices, and internal systems like your finance, your ERP, or your building management systems. And then for collating it, you have options: manual spreadsheets, building an internal data warehouse, or using specialized carbon accounting software. The right choice really depends on your complexity and your resources. So, in summary, this is your action plan. First, get clear on your timing and obligations. Second, map out what data you need for all 3 scopes. And third, decide on your data collection system. And then fourth, start gathering your information. And if this feels overwhelming, check out our next video on this topic. Thank you.